Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 94 for September 17th, 2019. Today, we will be discussing your trade ideas. So over the last few days, about 30 people submitted up to 5 symbols each, and I put the list together. You should have seen that in the email if you are subscribed to the updates. But we're going to get through as many of those as we can today. We're broadcasting and recording this at 4 p.m. Eastern Time. And you can also, so the recording will be up on TimingResearch.com as soon as the recording is over. And you can also subscribe to the Timing Research on YouTube and your favorite podcast directory to get updates on new episodes there. My name is David Kosmeter. I'm the creator of TimingResearch.com. And today I have arranged for Felix Frey and Jim Kenny to join us. And Jim will be moderating again. So I'm going to go ahead and turn it over to Jim.
Okay, great, David. Thank you very much. And we're very fortunate here to have Felix with us today. Optionsgeek.com is his website. We all know from Best Buy they have a Geek Squad. And the reason they have a Geek Squad is that they deal in a lot of complicated electronics. And options have a lot of moving parts. And if you get a guy who knows what he's doing and that has big background in it, it could be helpful to people that don't understand them very well. So I think that's basically where the website's coming from, is to try to educate people on a fairly complicated subject matter to some people. But without further ado, Felix is going to introduce himself and give us a little bit of an idea of what we're doing over there at optionsgeek.com.
Sure. Hey, thanks for having me, Jim. It's great being back. I wanted to just set some ground rules in the way I think and the way I look at things, and sort of give your audience a framework from where we're starting. I teach this, what you're looking at here, which is where the top 1% find edge. And I just wanted to briefly walk through it. So in the first stage, clearly most people know that the top 1%, they have all the resources, the people, the manpower, the money to get the best ideas. So how they get their best ideas is the first place where they have edge. But once they have an idea, right? Once they do the analysis with a quantitative, fundamental data mining, once they get that idea, they have to make a decision on how they want to invest in that idea, whether it's through stock or options. And understanding if and when they should use options, that's also their edge, okay? It's very specific. Once they decide that, this idea that I have is an options play, then they gotta have a process of choosing the right option or the right strategy. That is the third edge. And then lastly, how they put it all together in a plan, exits, entries, the amount of capital they're gonna commit, and managing the risk reward throughout the trade, that's also their edge. So at Options Geek, that's what we're doing. I've basically narrowed it down to 2 questions when it comes to the option secret, I call it, by the top 1%. What they know. When do I use options? And the answer to which option do I choose? Those 2 questions are really the only 2 questions that separate the average investor from the top hedge fund managers in the world. So that being said, right now, usually if we're walking through ideas that I don't know, I haven't actually analyzed, then essentially what we're looking for is we're starting at number 1. We're going to be looking at charts. We're going to be discussing fundamentals or high-level fundamentals, and then we're going to try to decide, all right, well, this is a stock play, here's a risk reward, or today we're going to probably look at some option strategies and if this is an options idea. Usually what I do at optionsgeek.com is I actually look at unusual options activity so that if I'm assuming that this is how the hedge fund manager is working, right? I've worked at a top hedge fund, so I know this is how it works. And I can assume that most hedge funds are going to do the same thing. Then when someone is out there trading 20,000 options, then I can assume this process was in order. They had an idea. They decided not to use stock. They used options, and they used options for a reason. And they chose the option that they bought for a specific reason. So when I see that unusual activity, and I can hone in on the fact that that there was a buyer and he bought a lot of them, then I can try, and what I'm trying to do is to try to back out what that idea might be. very difficult to do, but that's where charts come into play next, because then charts give me that confidence that I think I might have, I think I might have gotten the idea, or at least know what this guy's thinking about. Maybe it's an earnings announcement. Maybe it's a Apple presentation. Maybe it's a FDA meeting, whatever it might be that I'm digging for. But I think maybe we're honing in on the right event. Then that's when I'm starting to look at, that's why I'm starting to look at charts to sort of give me that confidence that I think I got it. He's buying this particular option for this reason, and he's buying this amount. And piecing all of that together is the detective work that I'm doing on a day-to-day basis. So with that, let's talk about ideas, and then I can show you an idea that I'm looking at.
Yeah, I'll give you a little example of one of what you're talking about that came to my attention. It was on Freeport McMoran FCX when it was trading underneath $9.
Yes.
And somebody on CNBC said they had a guy take a huge position at $9.50.
That's right.
And it was against the trend, and it was against everything else. And now I see that stock has gone to hit as high as 11.
That's right.
And that would be a classic example. That it always doesn't work that way, obviously.
That's right. No,
but it's certainly worth consideration, and that was an example when it did work.
Of course. And I think, at optionsgeek.com, that's what we are trying to do. We're trying to play, we're trying to incorporate a mathematical approach to finding those trades, right? Because if I can find 10 trades that I like and hit on 3 or 4 in the way that, like that Freeport just hit, or I can show you a couple other trades that hit, that's when the math works, right? 3, 4 out of 10, and you're going to be okay.
And a lot of these equity options premiums are not that heavy. Another one that I saw recently was in Royal Dutch Shell.
Yeah.
The 56 calls were going for like less than $1.
That's right.
And, and it was trading at like 55. And the next thing you know, there's an event and it's trading at 58, and you're getting a good whack on that call option. Again, they don't always work that way, but that's why you're in the lake fishing, because, if you have a big gain and the other ones are limited losses, maybe the math works out, even if you're not right all the time.
That's right. That's what we're trying to do.
Yeah. All right. And like I say, there's merit to that. There's no doubt about it. So people should get their notepads out, and at the end of the broadcast, make sure you know how to get in contact with Felix, because this information is worthwhile. Okay. So we're going to start out with the first stock that was actually called in or typed in. That's not actually on the list, but it's Bank of America, BAC. And, we've had some movement up in the banks, and now they're stalled out a little bit. We got a big announcement on the Fed tomorrow, although everyone's pretty much talking a quarter point. And, yields have backed up a little bit from their overdone basis, but, still in a downward trajectory overall. What's this B of A looking like?
Do you see my screen there? BAC?
Yep. Yeah, we can see it. Yep.
So I'll just walk through my process. What I generally do is try to just take a snapshot of where this thing's coming from. We did this the last time. I'll just do it again. I think it's just for me, it works, right? I want to see where this thing's coming from the last 3 years, what it's done. First picture. Then I want to just look at, okay, I see this. Here's the end of the year. It's flat. To me, this looks good. I can tell you that in the last, let's just go back here. Sorry, let's go look in the last year chart, but in the last few weeks, we want to do 1 year, and we want to do daily. So we have this large move in Bank of America, but in the last few weeks, right over here, there's been significant call buyers in the 31 line. Okay, so these guys are they're looking for a big move higher. I think that, the interest rates have gone so low, it's obviously not good for the banks. I'm not a big believer that, or at least I believe that recession is potentially there, but, I'm a little bit less negative than probably the rest of the universe.
Yeah, this chart shows a stock that clearly has been violating up and down the moving averages, which if you're trading strength and buying dips and selling strength, it's been a pretty good way. But if you're trying to look for a trend, it's been a rough racket.
That's right. So I would say that I don't – this one doesn't give me I don't know either way. I look at it and it's been there for a long time. It's trading up and down between 31 and 26 four times here in the last, 5-6 months. Will it break up or down? Sure. I'd handicap it that it breaks 31, a little bit higher than breaking sort of this 50-day again. But I don't know. I don't really have a big opinion here. I can tell you by looking at, I always do this by looking at, can you see my screen here?
Yeah.
So Bank of America, I'm going to look at November options. I want to see here. So I basically look at three things. I'm looking for earnings in Bank of America.
Yeah. When do they come out?
Earnings come out sometime in October here. Okay. So October earnings, I can look at options here, but I actually want to see where the market's sort of pricing things. So the 31 calls here, 44 cents, 5,000. A lot of this stuff's been trading, 32,000 open interest. They're kind of loaded up here into 30 and 31. I've seen 32s. This area right here over the last, call it 3 weeks, has been very active. So you can see here by 32 and a half, 33, you're talking, they're thinking 33 plus on this. So if it does break out, they're playing, the market right now is playing a breakout here. Okay, so you have 31 to 26. It's very clear, 5 points up and down. If it breaks 31 sharply, I think it's going to 31 plus 5 is 36. That's how I would look at it. So and it looks like that's what the crowd is thinking. I'm not saying October in one shot on the earnings, but it looks like you can see a 33 print. The market is saying it can get half of 36, between 36 in one earnings announcement. So that's what I'd be looking for on the positive end. And then November, just to see what that's saying. November is saying the same thing. It's a little bit more time. You're asking for more time. They're going to charge you a little bit more. That means your target stock price has got to be higher. But I would say 33 to 36 over the next 3 months in Bank of America is where the market is sort of looking for it to get to, because they're buying the options.
Yeah, and the premiums look pretty reasonable.
Yeah, it's not bad at all. Not bad at all. I mean, this will tell you that it's high right here. Okay, that'll tell you that it's high. But this right here is telling you that skew is bearish. That means the calls, it might be high in the at the money, but the calls are actually a lot. The calls are actually a lot more, a lot cheaper. Okay, bearish means that the market is bidding up the puts relative to the calls. So call value here is actually pretty good. Yeah.
And there's some talk of a year-end rally, a Santa Claus rally, and you'd imagine it's possible the banks would participate in that. And if that's in fact true, obviously circumstances can change on these calls pretty quick.
Yeah, I'm in that camp. I'm in the camp of Trump wants the market higher, and everything is talk until you actually see things break down. So, but yeah, so that's what I would say. I would say that the market is actively pursuing these options in the 30 range, 30, 31. And if you were going to play that, it's probably the reason why they're doing it. It's probably a better play than actually holding the stock. You see, the stock can easily go back to 26. So, you're playing for a breakout. You pay 60 cents to 80 cents to play it up here and get rid of your stock. So people probably have bought stock here, selling stock, buying calls, and looking for a breakout.
What's a DEIS 32 look like? Is it still under $1?
DEIS 32s, hang on. Yeah, 67 cents. I think the 31s
and even the 31s at $1 or
yeah, I like those a little bit better.
Yeah.
So that's how I would play it. I think the money's come in here in the 26, 27 range. If they bought it down here, they've written the stock up for 3 points, 4 points, and they're probably letting go of the stock, but actually getting long options here, right? So it's a risk reward play. Risk management, reducing the amount of stock, the amount of money they have on the table with stock, and paying for those calls.
I mean, if you had a 3-point gain in it from 27 to 30, you take the 3 points off the table, you throw $1 on the table at 31, exactly. And you got a free look at 31.
That is exactly how they play the game.
Yeah. All right, well, let's get to the next one, which is Facebook, which obviously is a company that's got a lot of news coming at you all different ways. It's trading 188 and change right now. It was up today.
This is another one. I looked at this earlier. I didn't, it was very ho-hum. It was very like, it's made this massive move, this down here, back up. This is the data, bad earnings, the data, the breach. And it's to me, it's ho-hum right now. I don't really have that much of an opinion on this one. There's a couple on the list that I think are better. But if I was looking at this and I'd say, okay, Facebook, what you have here is a market that's trading near its highs. You have the FANGs. It looks like the FANGs have, been a source of liquidity for other names. You have momentum versus value over the last week has been, sort of a tremendous trade against the quants who've been on these FANGs. But you look at this Facebook and you have, to me, it just looks like a tough trade in options. I don't have a particular, to be honest, a particular, like 210 here looks like a tough spot to get through again.
Mm-hmm.
And if it breaks down, I mean, this is a higher low with a gap at 160. So 160, 210. I don't think you're going to get much of that. And you got to be perfect here to be in the options.
What's a D's 210 looking like if you just wanted to have a hedge in case all heck's going to break loose at the end? Right now, it seems like the transports and the Russell, the small cap, seem to be getting all the dough.
Yeah.
But that could change if people, they want $3
are about 340, 335, 340.
Yeah.
Yeah, not bad. It's to me, I think you're better off buying the stock, stopping yourself on a break of that low.
180 right now. Yeah.
Yeah.
All right. Well, let's take a look at the next one on the list, which is this coffee. And I've heard some good things about this recently. Lucky Coffee.
Tell me what you know. I've seen call buying in this name for the last couple of months, and it's a wild one. So there was call buying here. Let's just wind this up. There was call buying here, right here. There was call buying, and it shot up. Then it came. This is a tough one because the volatility is really high. Really high. I mean, the market knows that this thing could move. Luckin Coffee. Let's get this down here. Not sure where is that going here.
Again, the Chinese consumer is supposed to be very, very strong. So this is kind of the Starbucks of China a little bit, isn't it?
Yeah, that's what I say. All right, so we got earnings in November. So you got the stock trading 22.80. The 25 calls $1.55. That doesn't strike me as actually that bad, considering the stock just came from here, and if it breaks, I mean, look, this is 22.80. This stock is one of those things that can break down tremendously. I think that if you're going to use options here, it's probably better to think about them as it's 60 to 70 vols. Probably think you'd probably want to sell them. Or find ways to be able to use the high volatility in the name to sell them. So one way, if you wanted to be long this stock here through earnings, instead of buying the stock, just looking at the 17.5. $17.5, 25, sell the put, buy the call. See if that works. 17. Sell the put, buy the call is about 75 cents. Probably squeeze it to be a little bit less, 60 cents. So instead of taking the risk up and down, $2, $3, it's sort of like, I don't want to own the stock. You don't have to think about it. I'll own the stock down at 17.5. I like the stock down there. Mm-hmm. That's fine. So 60 cents, 70 cents. I'm playing the upside to through 25.
Yeah, the moving averages have crossed to the upside. That's not a bad thing. The volume's drying up a little bit today, only about 2.5 million shares. So maybe they're waiting on something, and then the volume will pick up dramatically, whichever way that goes,
Yeah, we're right here at that gap too. So, probably 24, maybe it wants to fill, but, it probably stays around here till November, up and down $3-4.
All right, let's go over to Costco, the old
Costco,
retailer there.
this is a great stock. I mean, we talked about this last time. This is just a great stock. They have a great business.
Mm-hmm.
The stock here is gapped up, huge, traded, another 7%, from here, from that initial move. And, it's come off. I mean, this is a big level right here. This is 285. So it can go 285 to, retouch these highs right here, 305, 310-ish. It's a good stock. It's lofty. I mean, I'm looking at it and saying that, can this actually, if this breaks 285, I don't want to be in the stock because it shouldn't. It really shouldn't. This is huge volume here, 10 million shares on a $300 stock. It's big volume. They should want this stock here at 285. So it's 285, looking at 310. Again, that's either 285 is down 6, 310 up 20, down or up 15. So that by itself looks like a good stock trade. Just looking at this, down 6, down 7, you want to be buying it up to down to 50 days. So down 7, up 15, 2-to-1 on that trade. And go look at, let's just see, where's earnings? When's earnings?
Yeah, the PE ratio is about 35-to-1. That seems a little bit on the high side.
Yeah, it does seem high. They love this stock, though. The street absolutely
loves no doubt about it, yeah.
Loves it. So we have here stock trading 291. There's you got to think a lot higher here. Let's just go here for a second. I just want to see Costco January, just to give you a sense of like buying options where you'd have to think. So the market is pricing in, if you wanted to buy the 310 calls, they're looking at, basically they challenge you to find an excuse to buy the stock because you think it's going higher than 336. Okay, so 336 is another moonshot up here by the end of the year. Now, if you brought it back, maybe it gets there, but that's.
What's the bottom part of your chart that seems like it's crossing over to the downside?
Which part?
The one with the MACD, I guess it is.
Oh yes, this is the MACD. Yes,
and that looks a little bit rollover, doesn't it?
Yes. So when I looked at this chart, what I saw was 285 breaks 285. I think it's going right here, 245. So if China falls apart, something's not working, something's bad. You got to respect that it should not go back down below this. This is a big volume, 2 days, big volumes. 5 million shares per day. It should be, if they wanted to buy it here on that first dip back, they should want to buy it again, right? So the market's got to turn. Market turns, 240 is sort of like where I'm looking at it, right here where it sort of took off. These guys will start getting a little bit worried, and then the big boys who bought it down here and sort of took it up here, they'll buy it around there. So if you want to protect Costco, which is, I'd lean to protect, even though this company is great, I would lean to protect here. Maybe sell an upside call to the end of the year.
The all-time high is 307. So if you're selling calls, above that,
exactly.
At
so
least
selling the 310s to buy
275, something like that.
I think I even like it better to buy the 280, 250. 275, 250 put spread.
Yeah.
For $5.
Yep.
So I pay $5. I take in $7.75 here. I take in almost $3 on that trade and still hold my stock, feeling safe that I'm protecting that home move to 245. Right. This level right here, 245. They'll give you a shot, or at least they should give you a shot if it's coming down to be able to get out of that stock. Okay, so if it moves all the way down, you'd be able to get out of that stock, but you protect yourself with that put spread. Okay, and that's just good risk management right there, right? You take a little bit in, it gets through. I mean, you've rode this stock for a long way. That, to me, that's what I'd be looking to protect. That pocket right there, 280 to 245,
and still give yourself upside.
and still give yourself, I mean, it's nothing to sneeze at, right? You got $3 in your pocket, so 291, 9, 13, that's $22. You're talking about 7% in the next 3 months. It's not terrible, right? I mean, it's definitely not terrible. Nothing to sneeze at, 7% over 3 months.
Well, this next one, the bloom's coming off the rose a bit. Excuse me. And it's Shopify. And it was down
Yeah, we talked
$9
about
here
this
today.
one. We talked about this one the last time. It actually went a little bit higher.
Yeah.
We were talking about I think it was the 330, 340 line.
Yeah,
and
right.
selling to 410. And, I think, I still think that was the right trade. I still, now they make it even harder, right? Now they're going to force you to sell somewhere in the 375 range in order to protect yourself from 300 down to 250. But yeah, this to me, I agree with you, does not look like, it looks like it can make I'd look for another move back towards like the 350. See that right up there? Let's just go a little closer.
And the MACD really fell off, huh?
Right. Yeah, this doesn't bode so well. So this right here, I mean, these are big volume days here. Guys getting out, that's telling you something there. So this one I would look to protect or even play short, but they're not going to make this. They're not going to make this cheap. I can tell you just by looking at it. Down 3% today. Let's see here. Shopify, late October, November earnings. So we got to go to November, the 300, 14 bucks. What's that? 4%. 4% and already 10% down. So it's about 15% break even. I mean, it's not. Just shows you how much the market thinks this thing could go down. So.
Yeah, like we said, the 200-day average is way down to 244. The 50-day was 343. It looks like that's already in play. And the volume's been going, we're 5.5 million shares today. It's been averaging about 2 million for the last 50 days. So like you were saying, Tom, Dick, and Harry are getting out right now.
Yeah, this one I would stay away from the long side, and I'd look to, I mean,
you could get a low volume pop at some point, but who knows?
Yeah, I'd stay away from this stock on a long side.
All right, let's look at THC.
This stock is
Tenet Healthcare.
It's trading. I don't know what's going on here, but I just looked at it right before we went live, and this move and this move is, and then to hold it here, something going on here. I don't know much, but let's just want to get a quick look because this looks there's a huge triangle here, but this looks pretty good.
Mm-hmm.
This looks like this breaks here. It's going to 40 to me. It just looks, there's something going on here for it to spike in the last 2 months. I don't know the news. I did see some call buying, but it was, let's just see this, Tenet Healthcare. They want $2 for the 26 calls in November. So we have earnings.
Well, you've had a $6 rally this month alone.
Yeah.
So that's a pretty good size move. There, if you're looking at that chart, there is some lows that came in the middle of April, middle of March, end of March, right around that 28 number. Do you see that? And I'm wondering if that could be problematic if this thing's going to run out of steam, because the volume was huge in August when it took that first move from 17 to 24, and then the volume's been kind of sanguine since.
Yeah.
And so it has gone up fast, but this 28 number could be a number that could be something there as well.
Yeah, I mean the chart. I wouldn't be sure. The chart scares me. I would like to dig in a little bit more and figure out exactly what's going on here. But this chart is clearly a little
spazzy.
Yeah, it's a little spastic. It's a little scary. There's something going on. People want in here, and they're trying to get in. Maybe the liquidity is not even that much. It's 2 million shares a day, so something's going on there. The market's not making it easy. They're saying they're pricing in. You want to see earnings, you got to see 31. So I don't. That's a big move after already making a $6 move. This is a big move, but I wouldn't I'll tell you what, as a former volatility trader, if a big hedge fund guy came in and said, I want to buy 5,000 of these 26 calls, I wouldn't be so excited to sell them at $1.90. I'll tell you that much. It's just, there's something going on here.
Yeah, in other words, is there something behind the curtain, like a takeover or some kind of a?
There's something going on here. There's something going on there. Just by looking at that and look at the way they got these calls priced, it's already made, like you said, a big move, and they're pricing it higher.
Yeah.
And I've seen some sneaky call buyers in there. I would.
I wouldn't particularly trust it at this level because of that 28 resistance that's coming off of those former lows, and the fact that you've come up so fast, right to the middle of the trading range for the year. 32 has been the high, 16 has been the low. You're at 24, 25.
Yeah.
So you're kind of in the middle things. But as you say, when it comes out like this, there could be something going on, and obviously you could open up at 40 if they have a deal.
Yeah, 26, 28 is gap up, gap down. There's a pocket here, right? Mm-hmm. So it's kind of stopped at this level, but this pocket around here is really, money came in here, came right out here. So now, these guys got killed over here, down. Money's coming back in. Money's trying to get back in. It's moving too fast. There's something going on. I'd be a little nervous, and I think the options are telling you to be a little bit nervous. If you don't want to sell, if you own it, then and you're not worried about getting rid of your stock, then they're probably not a bad sale. The 28s, 29s, you can get $4 over the next 4 weeks, but 6 weeks.
Or again, if you caught this $7 move, you take $7 off the table, you slap $1 back on the table, you're in there at 28, and you just let God sort it out.
That's right. That's exactly that's probably the best play. If you've been long this, I think the market is saying there's a chance this thing goes right back down to 22, and you'd be knocking your head against the wall, right? To get back around $3. Or this thing continues and gets to like the 30, 31 range. So, yeah, I would think to potentially buy one of these. I'd probably put, if it's going to go, it's going to go. The way I look at it, if it's going to go, it's going to go. So I want to put the least amount of capital here. So 150, sell my stock and buy the 150 calls.
Yeah. Because like I say, if it's no good, you don't want to have too much out there.
That's right.
All right, we're going to go one more, then we're going to hear some of the stuff that you're watching. We're going to go to Boeing, which obviously this 340, 350 range is starting to be the base on it. And it's been bouncing and falling and bouncing and falling off of that 340, 350. Right now it's today up $5. 44-1 PE ratio doesn't sound cheap, but it's a two-horse race between them and Airbus. And they are trying to resolve these problems. So what do we see here in Boeing? Is there anything going on?
So this is an interesting name. I mean, I was, out of all the names, I really liked this, and I thought there was a good options play. I mean, they've thrown everything at this, right? Everything they can in the last 6 months, right? This thing dropped. People were buying puts. They were buying the 300 puts. There was investigations. There was a lot going on right here, and the stock is actually right back to that moment where it dropped, that gap, and this is pretty good. I mean, there are buyers at this level, 325. I think people are looking at this as a long-term trade. The big long-term money, which eventually they control the market. They're buying this stock. They find value at 300. They took it from 100 to 300. This is a 2-year process. Probably doesn't do that much. But what I would say is, what I looked at here was, I want to do the Boeing. The Jan 400, 440 call spread. So I'm going to look at the Jan 400, 440 call spread, right? Because if I'm looking at the chart, let's just go back. The highs are 440, okay? This is a strong move here, okay? We're at these levels. Could come down. Could obviously come back down to 350, 360. But this is a strong move right here. They try to push it down again. This was like down. We're going to push it down hard. Breaks that 330 low. People get scared. And then it just came right back to 360 to 370. Didn't waste any time. Took a week and a half and traded right back to this 385. This left a lot. This is what's happening here is what people thought was going to happen here, right? This move here in May, June, it was like, okay, we're back. Boeing's good. It's a good stock. okay, we're going to keep buying it, and then all of a sudden just drops, breaks this low, and people are getting out. You know, the weak money's getting out, and it just runs them right over. We're trading right back to 385. To me, this is a good stock. I want to try to play this pocket. If it's good on earnings and the company comes out with better news, the past is behind us. Through 400 to 440 is where I want to try to capture. So I want to capture that, and where can I get long this stock again? So I basically looked at the January 400, 440 call spread, selling the 350 put. I'd get out of my stock, and I'd say, all right, you know what? I'm gonna get out of stock. I'm gonna sell this one at around $11, and I'm gonna buy the 400, 440 call spread for about $11, so I can get into that trade for free. Make sense?
Yeah. No, I'm just trying to do the math here. So you're taking in enough premium to pay for the call spread.
Yep, $11, 350, $11 right here in January.
Yep.
And I buy the 1675 and sell the 440s. Now, that works well. One, because I'm going to show you here what I'm trying to do. See this right here, 3-month at the money implied vol? Mm-hmm. It's high. Okay, so in general, if I'm doing spreads, I want to be essentially a better seller of options. So I have two options here. I'm selling the 350 puts, and I'm selling the 440 calls. I'm also buying that. I am buying that closer to that the money. So that's why I'm doing that. But I'm also, so that's one. So I'm better seller of options in spreads here. And then the 3-month sentiment bull says bearish, which means that they're bidding up the puts. So I'm taking advantage. I'm taking advantage of the bid and puts, and I'm going to sell the market those puts. And I'm going to take advantage of that skew by also buying the calls, which are the 400 calls, upside calls. So I'm taking advantage by being a net seller of options. I'm taking advantage of the implied volatility being high in spreads. And by using a spread that actually attacks this right here, the market being bearish, that means they're pricing puts higher than calls relatively. I'm actually going to sell the market the puts and buy those calls. And I'm going to go into a spread where I'm a net seller of options. So that's why that trade aesthetically is going to look good, and it should actually act well either in either direction.
And it looks very good as we see it today. The only thing you got to remember is you are signing up to buy the 350 stock at 350. So you got to make sure you have the wherewithal to take that in if you had to and you couldn't cover your positions properly. So that's the only thing you got to remember on that.
That's right. That's right.
Okay. I'm dying to hear, and I'm hoping everybody else is dying to hear some of the ideas that you're looking at regarding inordinate activity in the option market as it's connected to certain stocks and other things.
Sure.
So some of your own things.
So one of the things, let's just go back for a second. I just want to show, let's go back and we're going to get back to our chart here. Okay. We've been talking about technicals really to decide whether or not an options play is available. So I usually go the other way. Like we said, I usually find the unusual option activity. I'm going to show you one of those that I found, but I'm also going to show you one that, well, maybe we'll have time for the next one for this one, but this is an important one. An idea that I found over the last week with a partner of mine is a company called True. And True is TrueCar. Now this stock, just to give you quickly the story, this stock is come down a lot. Okay, it's come down a lot. It's come down from 22 down to $4. Essentially, the story is pretty simple. It's a story on. Let me just show you the write-up I made here. Hang on. The story is pretty simple. It's a stock that's come down a lot. They essentially they act as a middleman between the customer and the dealership. Eventually, you go on to their website. You're looking to buy, say, a Toyota, and you press Toyota, the make, and it tells you which dealership around the neighborhood has the car that you're looking for. They were found. There was a lawsuit essentially that they won. Okay, the interesting part is that they actually won this lawsuit, and by winning it, they won on a technicality. Essentially, they were being sued by dealers, by dealerships who weren't their customers. but essentially they were potential customers, and they won on a technicality, but they were found to have willfully done some false advertising, which is a big no-no. And the judge actually made a statement in the case that essentially they were falsely advertising, but because the dealerships were not direct competitors, they could not win any reward. Unfortunately, in winning that, they actually exposed them. They're exposed to lawsuits by their competitors. And so this idea hinges on the fact that they are exposed, and that the market has not appreciated that, because this is only a $450 million company, and if they get sued by their direct competitors, and it is, if you read through the summary judgments, it is the obvious conclusion that anybody who is a direct competitor, and there are dozens of competitors of TrueCar. You can imagine how many of these websites there are that you see out there. They're all fighting for your purchase of a car. It's obvious that they will come and sue, in my opinion. If they do come and sue, then TrueCar is essentially out of business. Okay, they'll have to file for bankruptcy. There are footnotes in their reports, in their quarterly reports, stating that they can't reconcile their EBITDA downward estimates. There's a lot of things. It's not. I don't know. I don't want to use the word criminal. It's not criminal because they did actually make the statements. But it does give you an idea. What I've laid out is what the thesis is. So here we have Kramer-Levin obtained significant victory for TrueCar. So that's a positive headline. Bloomberg, TrueCar beats false ad suit after dealers fail to show harm, right? So what I've done here is just outline the whole story and essentially tell people that, look, I think this is a zero by next year, but I'm not going to play the options for next year. I think as this story gets more people start appreciating the story more over the next few weeks, this stock is going to be under significant pressure. And if we see a lawsuit, I think people wake up and say it's a zero. It's actually a zero. So this is one of those situations where, right here, the U.S. District Court for Southern District of New York found evidence that TrueCar willfully violated the Lanham Act, which is false advertising, governing trademark and false advertising law. But the dealers needed to present evidence of harm because they're not direct competitors with TrueCar. Okay, so this is the story. Bloomberg, it hit the tape on Bloomberg yesterday that this thesis was floating around, but essentially I'm playing the October 4 puts. The October 4 puts are, let's go back to our October 4 puts in True. Right now they're 31 cents, 38 cents. This is, to me, this is a good play. The stock had traded, just look at the chart. The stock had just finished trading down on earnings. This was a huge earnings miss. This is the CEO resigning. There's a lot of problems here. Management, the whole C-suite has disappeared. Again, this was their earnings report. The stock has traded back to sort of that gap level, has traded weak since. I can see this thing hitting back this was 301 low. So the 301 essentially is my first target. You get any negative news, the company has not responded to sort of the thesis and what's floating around now. They have one major customer, which is 1/3 of their business. That customer is USAA. They actually own stock. They got into bed with TrueCar 5 years ago. Their contract is up for renewal in the next 4 months. This is a big story for what is a small cap name. And if this was a few $billion-dollar company, I tell you we should be pouring all our money into this, because this seems to be a no-brainer. But like anything else, the risk is USAA re-signs. I don't think they will. I'm looking at it. I'm asking myself, why would they? The people I've talked to, we've all come to the conclusion that they could. They own 8.8 million shares. I've seen dumber things happen. The USAA representative is the chairman of the board. There's a connection there, but I think they got into bed with the wrong people, bad actors, and unfortunately, it's not going to turn out well. It's likely not going to turn out well for this company. So this is a name that the 4 puts, 6 weeks to look at it, 6 weeks to see whether or not the July case closed. That lawsuit was won in July. The direct competitors will come out, I think, within 3 months. So you give yourself July to October. The 5-year why October? The 5-year contract is due in February, but they got a 120-day window, so that's about 4 months, which leads you right to October. So I think we're going to learn a lot of answers in the next 6 weeks. Again, it's 35 cents. The option geek community got it in around 25, 30 cents. So it's 25, 30 cents. To make a dollar, to make 75 cents to a dollar on the first batch. And if it's really bad, I think we can get, break that and get the 2.5. That's sort of the thesis. That's what I'm looking at. That's me looking at an idea first. Okay, so that's me looking at an idea first. And let's go back. Me looking at an idea first, okay, and walking through, is this a stock idea? I could short it at 4, and watch it go down to 3. Or if USAA does sign, the stock's going to trade up $1, in my opinion, $1.25, just on positive news and someone is backing them. So I just thought this is an option play because I can get that option around 30 cents, 25, 30 cents, and let sleep well. And if USA signs and renews, then it's going up. It's going to be wrong. But if they don't, this thing is could be in a little bit of a tailspin over the next 2 months.
Okay, I get it.
Okay.
Again, this is something that you've done some homework on something that's been deteriorating, as you can see, and it's deteriorating for very good reasons. And if the last shoe to drop is the give-up phase, then this thing makes a lot of sense. And like you say, if people are short the stock and they decide to cover it, or this USAA comes in with some kind of an offer, then obviously all bets are off at that point.
Right.
All right. What else? Do you have anything in the energy sector? I was wondering.
Yeah, you know what? I put this idea out just a few days ago on last week, but it's made its move, come back down, and hang on one second, let me find it for you. So we had Noble Energy. So Noble Energy was
NOBL, I think it is.
NBL, yeah, Noble NOBLE, Noble Energy. Telling people to buy the November 15th, 22.5 calls. So this is what I was seeing. I mean, I usually, again, I start with the unusual activity 99% of the time. When I put, someone was out there buying calls. So they were out there buying activity in all the names last Thursday, Friday. They were buying MPC calls, Halliburton calls. This is NOV. I can't remember the name of this one. National Oil something. National Oil call buyer, Slob call buying, and then there was Noble Energy. And essentially, they have a big gas field located in Israel, off the shore of Israel. They were recently upgraded. That was a trade. It looked like it was just all oils over the last week, and then obviously they couldn't. I never want to say they couldn't have known, but they shouldn't have known that a drone was going to strike Saudi Arabia. But obviously these all exploded. NOBL. So I was buying it basically on this pattern of all the different oil buyers and a little bit of the story with Oppenheimer's upgrade. It all started telling me a little bit of the story that the street was getting involved again with these things. The stocks have had this down move. This to me showed some strength here, and it had moved above this level. This gap closed it, went above this level, was trading 23.76. There was good volume here, and I thought, you know what, we're going to reach somewhere between 27.5, 28. That's what I was looking for. I looked at, they only had 22.5s and 25 calls. So the 25 calls, I just didn't want to reach for that. So I went for the 22 and a halves, a little bit in the money. Usually don't do that, but I figured I liked it better on a percentage basis. It was, I thought this was just a good play. If the stock traded lower below 23, it was probably going to be squeezed out here. There was going to be an exit. And then the rest is, let's get back to the,
Oil dropped about 5% here today, but the stocks of oil seem to be pretty firm.
Yeah, and all of them have seen this sort of move, but this here, so it did trade. So the way I do teach, we're buying the thing right around here. A week later, it trades higher, trades to 27. What I teach is people basically they're getting out here. Okay, that is, on that day, on that morning, it opens at 27, 20, 22, 27 and a quarter. They're getting out, right? The stock has made 100% return on an in the money option. That's pretty damn good, right? Usually, the back of the envelope calculations take a 65 delta option. You just take it as if we're targeting 200% on out of the money options, you just cut it in half. 100% is more than enough on an in the money option with a 65 70 delta. So the crowd's getting out here. It came down to 24 and a half. People ask me, should we get back in? I don't know. But this here, if it gets back to 23 and a half, I think the trade is live again. I'd like to see it on a slower pullback than just straight down. I think it was down mainly because the commotion is between Iran, Saudi Arabia, and Israel is not too far away, and that's where their assets are located. So it was up with everything else, and then it just sold off immediately from the after 10 o'clock.
The stock Tiva used to be $25 and it dropped all the way down to $6.
Yeah, looks great.
Is that a true car going out of business, or is that some value down here?
This one's something I don't know the whole story here. I've been watching this. So there was a very, very smart buyer, buying puts all the way down. Okay. When people thought there was value here, he was loading up on like 13 puts. Straight traded through 13. Trades down to 9, 10. He was loading up on 8 puts. I mean, this guy was loading up all the way down. And now I really don't see him there. But what I do see is sort of this pattern moving up here where it looks actually pretty good, if you ask me. And that put buyer it's not like he's coming back again, really trying to take down the stock.
A little bit of a head and shoulders bottom there.
Yeah, reversal, right? It just looks like it's one move. This is the second move. It holds. We need the 50-day to turn this way. The line's crossed up here. This is sort of, this is a MACD diversion here, right? You're looking at a low here in the price, low in the MACD with a lot of pressure, and then we make this low and the MACD doesn't get there. So I think sort of getting a little bit washed out here. You can easily get $10 back in this name.
Jake Bernstein mentioned the stock. I don't know if you can do a quick analysis on it and see what you think of it. It's SCCO. It's a copper stock. And, of course, we just saw what happened to Freeport-McMoRan. And is there anything here that would be telling us anything? It does have a good dividend over 4%.
Yeah. What's interesting is how they really try to knock this down. And when I see moves like this, these are telling moves. This move like this move down here, it's amazing how the market's just one way, and then it just goes the other way. But this is a telling move. I mean, I'd like to see it hold 33. So, can it get back to 33? I'd love to see it hold 33 and say, you know what, I'm going to make a move back up. So if it did that, then I'd say 20, 29, 36, that's 8. I'm sorry, 7, got back down to 33, 740. I mean, it brings it right back to the high. So I would lean more to, I just want to see where it's coming from. I mean, this is just a triangle. I mean, it's just moving here and it's moving here. It's it's a little bit of a, if you look at from here, it's a little bearish. If you look from here, it's bullish, right? It's just following this big trend. But, I think it's got to get above 37.5 on decent volume. And this thing makes another move to 42.5. So if
they were
copper,
saying I guess the Chinese might be buying a bunch of copper and
I think there's got to be a story like that. I mean, they're coming. I saw the FCX calls as well. And, to me, look at this, right? Look, this is FCX. Here's a low in the price. We have a steep low in the MACD. You have a really bad low here, and then the MACD doesn't follow, and then it just rips, and you see call buying here. I mean, it looks like, these things could – FCX was, we're talking about like in the beginning of the year, it's trading 14, and people thought it was going to 22. So, again, it all relates to China, and it's hard to handicap, what it would do, right? If China's good, if they come out with an agreement, the market by itself might be up 5 to 10%, and if it's not, these stocks already been getting killed since April. So, will they go back to the lows? Probably on a no deal, and things start falling apart. I don't see Trump going around the country. That's his barometer for that he's judging how he's done by the S&P 500 level. I think he wants to do anything he can to make sure to make sure it's up, to make sure when he's in the rally, he can tell people, I put money in your pocket. Your 401ks are up. I think that's, if China's good, these stocks will rip like I think nobody's ever seen before.
Yeah, this Jerry Jones of the Dallas Cowboys was on TV talking about an investment he made into Comstock Resources. And he said it's a long-term investment and all that. But when he was on, it was trading in the 7s, and now it's trading in the 10s.
What is that? What is that?
It's a CRK.
CRK.
And
looks awesome.
Yeah. So anyway, I
right,
saw
good.
that, and I thought that was a good one to take a shot at there. And
which one was it? CRK.
CRK. But it's also all over the place because there's a lot of news on it. So it went up towards 9, then went back towards 8, and now it's up to 10. And so it's a very volatile thing. But it is in natural gas, and it's in oil extraction and stuff like that. And supposedly, they bought a few different companies that is supposed to bolster the company, and it certainly has, as you can see from the chart, been reacting pretty well.
Yeah.
And
I'll leave you with one more that I look at in the way I look at the world. Baba, right? Alibaba.
Yeah, great.
If you look at it on a daily basis for the last 3 months, it's gets you dizzy. You can say this or that, but if you just pull back and you say in the 5 years, the market went from 60 to 210, and we are at 179, and 179 is where it was 2 years ago. And it's sort of been it's just been up and down between 130, 210, 130, 190. And it's kind of doing this crunch time thing here. And lo and behold, we have this China potentially agreement or non-agreement. And it's, we're getting right to that. So when I look at something like that, I don't look to think, all right, it's going from 179 to 195. That's not what the hedge funds are playing. The hedge funds are playing, if this thing breaks out, if China is good, this thing has done nothing for 2 years, and its last earnings were blockbuster.
Right.
I mean, they are doing everything right. They have an analyst meeting, I believe it's next week. So you have an analyst meeting next week. You have earnings in November. I have, as one of the ideas, I've got the group buying the November 195 calls. It's right around where we paid for it. So I think we paid around 330. It's trading around 350, but it's a blip. 195 is a blip. Can this thing, if this thing has a like back-to-back blockbuster earnings, they just posted a huge earnings number. They're not gonna have every investor in the world look at, in a room while they pitch Baba and say, yeah, we're terrible. They're gonna pitch, we're gonna be even better. You thought that earnings announcement was great? Wait till you see the end of the year. And I think, at some point the market wakes up again and it does one of these moves. It's one of those stocks that people love to hate, but at the end, it's one of the biggest stocks in the world. But at the end of the day, it's a blip. 195 is a blip. You can't look at it as 16 points. If if they come out and everybody's okay with Jack Ma leaving and the new guy, they come out, I suspect they're going to say great things, trades it up. And if they have another blockbuster earnings, why can't it trade 210?
The P ratio is not that bad, right around 30, especially with a company that has this kind of activity and 461 billion market cap. We're talking about a huge giant here.
This is a giant. So this is one that, you know what? I mean, it does move. It does have $30 moves. This was a $40 move down. It traded back up $30. It's hanging here. It's hanging at 180. I've watched the stock over the last week and a half. It's down $3, up $2. Forget the noise. There's a China deal. We have a potential China deal. You have a investor conference next week, and you got November earnings. And I think the volatility is not that expensive. So I think you could find a cheap play, take a shot there, sleep well, and have 3 possible events move the stock in a way that you want.
Right. Well, that's a lot of information and a lot of stuff to go over here, Felix. What I'd like you to do now at the top of the hour is just, again, reintroduce yourself to the crowd and also let them know how to get a hold of you. That's very important.
Sure.
And how they can take advantage of all this information, which obviously they'd have a hard time finding on their own.
Sure. So, again, my name is Felix Frey, F-R-E-Y. I am the creator and founder of OptionsGeek.com. You can go on to Options Geek and, I have an ebook there. Sign up. If you sign up, read the ebook. What I tell people is if you read the book, you're allowed to ask me questions. And then I can show you how to get the education. I've put out the best options education out there on the planet. I'm supposed to undersell and over-deliver, but I'm not afraid to say it. So, there's a lot of great testimonials. I invite people to check it out, and I invite people to ask me questions. Send me an email. I answer. I'm religious about answering all my emails, and I try to do it as quickly as I can. So, again, it's Felix at OptionsGeek.com. And again, thank you very much for having me, Jim.
Oh, you bet, Felix. Nothing but a pleasure. I'm going to turn it over to David now and thank everyone for attending here today. And again, David, back to you.
Okay. Thanks, guys. Great show. Jim, did you talk about your site?
Well, I just, again, for those who are listening, if you'd like to know some of the things that I'm focused on, just send me a quick email over to optionprofessor@gmail.com. And again, thanks for being here today.
All right. Thanks, guys.
Thank you.
Just a quick reminder to everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast network, or you can go to TimingResearch.com to get access to the recording for this show or any of the past shows. And I just want to thank my guests again for today, Felix
Frey.
Or Felix, did you
Felix
say Fry?
Felix Frey, it's fine.
I thought it was
Fry.
Fry, like Glenn Fry from the Eagles.
Fry.
You know?
Okay.
That's right.
I think I mispronounced it Frey last time. So
No worries.
Okay, Felix Fry. I'll make sure to do that. Of OptionsGeek.com and Jim Kenny of OptionProfessor.com. Thanks, guys.
Thanks,
David.
guys. All right. Thank you.